Separate managed accounts, SMAs, are the latest financial product buzz in crypto. On Tuesday, crypto asset manager Valkyrie Funds launched a new SMA, and Ark Invest will launch one October 17th. A few weeks back, Franklin Templeton also offered its first crypto-focused SMAs. While ETFs allow investors to own shares of the underlying assets, SMAs allow investors to directly own the underlying assets. Joining us now to discuss is Frank Downing of Ark Invest. He's a director of research there for Next Generation Internet as well. And a Valkyrie CIO, Steven McClurg. Always a pleasure to have Steve. Thank you, Steve and Frank, for joining us. So, well, Frank, let's start with you. What crypto assets does your SMA focus on? And maybe you can go into the strategy you're using there.
Yeah, I think before diving into the assets themselves, I think it's important to understand the context of how we frame public blockchains and the innovation that they're driving. And when we look at public blockchains, we see three parallel revolutions that are being catalyzed. The first and perhaps most profound is a monetary revolution brought forth by Bitcoin, which really introduced this novel, self-sovereign, censorship-resistant money that offers an alternative to central banking and fiat money. The second is a financial revolution where we see financial services being brought on-chain and executed outside and without the need of traditional financial intermediaries. And the third is an internet revolution where users are being empowered by digital ownership and creating novel forms of gaming and social coordination broadly that is disrupting traditional internet giants. And so what we've done is create two strategies that catalyze on these three revolutions. The first is a cryptocurrency strategy that capitalizes on the monetary revolution. This is highly concentrated in Bitcoin as that primary driver of the monetary revolution. And the second strategy is a crypto asset strategy that holds 8 to 20 high conviction crypto assets that fall within the financial and internet revolution. So within this, we categorize smart contract networks, decentralized finance, Web3, and infrastructure and scaling tokens.
All right. Would Binance Smart Token factor in any of that strategy?
It does not. We look at, especially on the smart contract space, decentralization as a core component and a differentiator that separates blockchain infrastructure from status quo infrastructure. And BNB did not make the cut.
Okay. Steve, I would love to hear, your approach to SMAs, what crypto assets you guys focus on and the strategy there.
Yeah, absolutely. Thanks, Christine, for having us. So we really have three different strategies that we're working with several registered investment advisors on and other financial advisors. And the first one is across the board, they're all risk managed. So in markets like this, we can actually move out of risk and into non-risk assets. So the first one is Bitcoin risk managed. So it only holds Bitcoin, but we risk manage it based on where risk is in the market. And then the other two are a combination of various other cryptocurrencies. Very similar to style based on where they are, and we also risk manage them. We include Bitcoin in all of those as a little bit more of a subtle risk management approach. Because we believe that Bitcoin is a little bit more stable and less volatile than many other cryptocurrencies, but we can also move out of that altogether as well. So when times like this, when we believe that the jobs report is going to come out and it's going to be a stronger job market than the Fed wants and risk of further tightening, we can actually move out of risk and go into market neutral.
So, Steve, I actually want to get to the question about risk management because just real quick, does that involve any derivatives at all, or is it just solely in and out of Bitcoin, depending on levels? Yeah,
it's no derivatives, no shorting, purely moving from risk assets to non-risk assets, fiat-based.
So This is to both of you. We always say not your keys, not your crypto. Exactly what kind of access do your customers have in terms of the wallets? I mean, are they given keys to these wallets? Can they pull out any time? Do they actually own the assets themselves and have the right to move in and out of them as they will? Or are you guys completely driving the bus here and they theoretically own it if they can get access to it, but good luck, Charlie, should things go wrong? Steve, I'll start with you, and then we'll go on to Frank.
Yeah, no, we're absolutely driving the bus here. Our clients are fiduciaries. They don't want the keys. They want to put that risk on us. So we have our own security teams. We work very closely with exchanges and custodian solutions that have their own security teams as well. So we take that risk on for them, and we manage that risk properly. Additionally, we do set it up to where they can move in and out of that product very quickly through a redemption or an order process.
How about you, Frank?
Yeah, likewise, very, very similar for our strategies. So we partner with exchanges and the custodians to manage these strategies, as well as a partner, Eaglebrook Advisors, who we're going to market with these strategies that provide the infrastructure that kind of connect all these pieces. Clients will be able to invest, advisors will be able to invest their client funds with low minimums, and it has direct integrations to existing portfolio management tools used by advisors.
But they won't have instant access to those particular wallets, correct? They'd have to go through you still.
Yep.
Okay. And is that a regulatory issue, or is that just easier to manage?
In terms of, so we're providing an actively managed strategy, right? And so the clients will be able to take their money in and out at will, but we'll dominate the asset selection and active management trading allocations within that strategy.
If for any reason I want to redeem and I said, look, I'd rather just get the Bitcoin. I don't want to cash out just yet. I mean, how does that work? Because if there for any tax reasons, for instance, if I don't want the cash, but I just want my Bitcoin or my ETH or whatever it is that possible?
I would think of it as an
individual.
Go ahead, Steve.
Oh, sorry. As an individual, there are several strategies that are non-SMA that you could do that with, like trust, for instance, where you can put your Bitcoin in, you can take your Bitcoin right back out, or you can take cash if that's what you want. In SMAs, these are more financial advisor tools. And the financial advisor, as the intermediary, probably would not let you just put Bitcoin in and take Bitcoin right back out. They have their own rules that they have to follow. They would likely be managing your money for you through these strategies, and would simply return cash or cash out into your overall brokerage account that then would allow you to invest in other types of assets.
What would the advantages of a crypto SMA be over an ETF, Frank?
Well, one is providing direct access to underlying crypto assets. So right now in the ETF structure, Ark took our first exposure in Bitcoin via the Grayscale Bitcoin Trust back in 2015, but we couldn't get direct exposure to the underlying asset. And everybody talks about the premium mid-discount swings for that, so understanding how it's less efficient than getting that direct underlying exposure. And it doesn't exist in a similar product for every crypto asset that could be an interesting investment. So through the SMA vehicle, we can give more direct access to underlying crypto tokens without additional wrappers like trusts or ETFs, future-based ETFs around the asset.
And am I right, Frank, in thinking that you guys are more focused on Bitcoin and Ether in this SMA?
So we have two strategies. The first, the cryptocurrency strategy, is focused on Bitcoin and Ether, with Bitcoin as the core holding. And based on the risk on or risk off motions of the market, we'll move in and out of that Ether position. Looking back historically, Ether typically performs stronger in risk on environments and weaker in risk off. So we'll manage that. That's the active component of the cryptocurrency strategy. The crypto asset strategy is a broader portfolio. So it includes Bitcoin and Ether, Ether the dominant position in that portfolio, as well as top tokens in the DeFi space, Web3, and infrastructure and scaling. So Polygon, Lido, examples of tokens in that strategy.
So Steve, what happens if there is a miracle and Gary Gensler wakes up one day and goes, you know what? I'd like an ETF. I was wrong about crypto ETFs. Let's make them happen. Does it make everything you're doing here with the SMA redundant?
Actually, it's quite the opposite. SMAs are actually a preferred vehicle by financial advisors. So as the ETF approval gets pushed out further and further, other types of vehicles like SMAs are essentially replacing it. So if a financial advisor is posed with, okay, do I put my client in an ETF or do I put my client in an SMA? If the SMA is available on their platform, most of the time they will choose the SMA. So the ETF is becoming very quickly less relevant. Additionally, a lot of people believe that institutional investors, this is pensions, life insurance companies, property and casualty insurance companies, and so forth, will really, come flooding in as soon as an ETF is approved. That's actually not quite the case either. They don't usually use ETFs themselves. They use direct investments. So as time goes on, a Bitcoin ETF becomes less and less relevant to a broad group of investors.
Steve, I wonder, you mentioned that Bitcoin will focus very prominently in the SMAs, but what about other tokens might you be looking at? And, why or why not would BNB token be in there? Or, other tokens like Solana, which has been criticized as being more centralized and due to the network outages.
Yeah, we also have a pretty fundamental bottom-up analysis on all tokens that we use. So we would eliminate certain tokens that are on blockchains that have security issues. There's a lot of tokens that have come to market in the last few years that sacrifice security for speed and cost, and it is a sacrifice. So if we see significant security breaches, then we wouldn't include that particular token. BNB is one that we haven't anticipated including as well.
Mm-hmm. Finally, just want to get your, you both are great markets guests. Frank, maybe we'll start with you, but your outlook overall in crypto heading toward the end of the year.
Yeah, so we've been thinking a lot about this and looking at kind of this tug of war between the Fed and the macro construct, which seems to have been driving a lot of price, and I think will through the end of the year. Whether the Fed oversteps and makes a policy mistake here, we're essentially pricing in a recession. That's a contrast to the underlying fundamentals. We've spent a lot of time researching on-chain analytics and looking at Bitcoin as an example for the broader crypto markets. You actually see really constructive developments here. So, for example, the long-term holder supply, or the percentage of supply held by long-term holders, has reached an all-time high. And the cost basis of those long-term holders has actually climbed above the cost basis of short-term holders, which historically has been a strong bottoming signal. So we see this positive developments on the fundamental level, despite the global macro overhang that probably will drive in the near term.
Steve, forecast for the end of the year.
Through the end of the year is tough. Looking a little further ahead, we're definitely in a recession. Prices will continue to go down across all risk assets until there's a pivot from the Fed. The old adage, don't fight the Fed, is very much in effect. And as much as people are hoping that we have these good CPI prints, these bad labor prints, and that the Fed will all of a sudden change their mind overnight, it's a bit of hopium. We believe that the Fed's going to raise interest rates 75 basis points at the next meeting, 50 at the one following that, and probably 225s next year before there's any type of change. So the markets are clearly in a downward trajectory at the moment. However, crypto has gone down more than the rest of the market. We kind of had our washout back in the spring with the deleveraging events. So crypto is probably closer to a bottom than, say, the S&P or NASDAQ even. So we're very bearish on the S&P, NASDAQ. S&P could go down another 20-25% through the end of the year even. But crypto is probably a little closer to the bottom. So we're a little bit more comfortable in this space.
All right, a pair of bears for us to end this Friday market segment.